One of the most important attributes of the forthcoming Web3 era is the composability of services. That is to say, the ability for business systems to be able to be combined and altered, disassembled and recombined with great ease. An essential part of this new business landscape is the data that informs and contextualizes decisions. We call these sources of data oracles. Welcome to W3B Talks, an ongoing exploration of the impact of Web3 and blockchain technologies on business, government, and society. My name's Doug Heinzman, and I'm the Chief Catalyst at the Blockchain Research Institute. In this episode, we're going to be talking about data oracles in general, and more specifically about climate. We're joined today by Manavi Garg. Manavi is the head of strategic partnerships at dClimate. dClimate is a decentralized network of climate data. It provides climate data to businesses in support of their business processes and decision-making. Manavi has a background in finance and economics and is an ESG committee member at the Canadian Blockchain Consortium. Welcome to the podcast, Manavi. How are you?
Good. Thank you so much for having me, Douglas. I'm really excited for this conversation today.
Okay, now, before we get started on this topic, just a bit of an aside. I noticed in kind of looking up some of your background, that you did your master's thesis on the relationship of social media and price volatility of cryptocurrency.
Yep.
So was there a relationship?
No, just a short answer. No. I did this I started doing my research, I think it was late 2017. And then, kind of worked through the entirety of 2018 and then completed my thesis in 2019. So that was kind of the peak of, I guess, like one of the first peaks of, when Bitcoin and crypto was becoming more mainstream. And my data and research were focused on Canada. And at the time, I guess there just wasn't enough activity to showcase like a strong relation. So yeah, a short answer, no.
Well, but on that point, the difference is that data changes, right? And so if you were redoing that thesis today, that you'd be working from a different data set.
Yeah, definitely.
And this kind of goes to the essential topic that we're talking about today. The idea that processes, transactions often need to be contextualized by data, and that data about the systems around us, measurements from the world, help to inform our decision making. And, in the Web3 era, this becomes a really kind of critical component that we have these abilities to introduce contextualizing data into processes and decision-making that result in better outcomes. And as I said in the introduction, we call these things data oracles. So before we actually get into this conversation, can you just help us understand what, in fact, a data oracle is?
Yeah, so just at a very, very high level, essentially a data oracle is just a way to bridge, off-chain data with on-chain data. So essentially bridging the gap between Web 2 and Web 3. And so maybe I can kind of give you an example of, what that looks like. So at dClimate, we partner up with this company called Chainlink that specializes in data oracles. And essentially, it's a way to bring climate data from, different Web 2 sources, such as NASA, NOAA, the European Space Agency, and so forth, onto the data marketplace that dClimate's built onto chain. And so, essentially, it's just, a way to bridge kind of that gap and then make that data available on a blockchain infrastructure.
Okay, so let me make sure I understand this. What you're saying is that, data comes from a lot of sources, and those sources have different levels of reliability, I assume. The weather station in my backyard may be different than NOAA or, one of the, national weather services, for example. But there's value in aggregating, bring together lots of trusted data sources and surfacing that information in ways that are readily consumable. And so you have a marketplace for data or an aggregation of data from those sources. And that on top of that, there is a marketplace for data in general, right? Because someone might want traffic data, or they might want, data about government spending, or data about, whatever, and which climate is one of those. And so you work with a company that aggregates many of these marketplaces. Am I getting that right?
Yeah, in a nutshell, yes. So essentially, data oracles can be used to bridge, any sort of data that you might be interested in. So let's say you are a financial company, you need some data from, the stock exchange, the stock markets. Essentially, you can have a data oracle that connects you with, let's say, data from the SEC, or like the Toronto Stock Exchange, or whatever it is. And essentially, the oracle will help you bring that data onto chain through different smart contracts that are developed within the oracles. So it really comes down to the use case at the end of the day, and what the kind of the foundation is of a business. So yeah, there's a wide variety of data that can be brought onto chain, right? So think of financial data, healthcare data, climate data, there's sports data. There's a lot of different companies doing, a lot of different use cases around, the types of data they might need. And so oracles are just a way of bridging that gap.
Okay, so let's use dClimate as kind of our major use case, and climate data is, of course, extraordinarily important for many reasons that I think are probably obvious to most people. It's kind of two parts of a marketplace, right? There's the source of data, right? So let's start with that source. So you bring in data from lots of sources around the world, and then package it so it's consumable. So where do you get your data from?
Yeah, absolutely. So I would actually break this answer down into a couple of different ways in terms of, the different types of sources that we have. So firstly, we get our data from, verified sources, like I mentioned, such as, NASA, NOAA, the European Space Agencies, and other similar sort of weather agencies and sources. And we make that available, in a clean manner on the data marketplace. And I'm happy to get into, what I mean by cleaning that data later in our conversation. Secondly, we partner up with, climate data companies who are experts in their fields. So we recently, back in September, fall 2022, we acquired a company called OSS Hub, which was it was a UK-based company that had, relations with a lot of different data providers who were experts in, different types of climate variables. So think of, experts within soil, precipitation, flood, and so forth. So, these companies were really kind of focused on 1 to 2 climate variables and building models and tools around that. And so, through that acquisition, we've expanded a lot of these partnerships with a lot of these companies that, I don't know if you've taken a look at our social media lately, but, we've been announcing a lot of these partnerships pretty much every other week with a lot of these data providers. So that's the kind of the second layer, or the source, where we are partnering up, directly with companies that might be providing, proprietary tools and data sets. And then I would say the third piece is, which is kind of on the roadmap and something we're actively working towards, is, incentivizing those individuals, researchers, and so forth, who might be developing their own data sets, for research projects or for, any academic needs. And so that forms kind of the third source, where individuals can then upload their data, and we provide, sort of monetary incentives for them to be able to do that.
So that's boy, if I want, there's lots of places I want to go with this conversation. So, yeah. But that point you were just on, I find very interesting, and it kind of leads into, one of the questions I was going to ask you later that has to do with kind of holes in the data. That, it's great to have data, but of course needs change, and some needs are unaddressed and some needs are a little more niche than others. And at some level, ultimately, there's a marketplace dynamic that says, lots of people need this data and it's not currently available. How do we get qualified people to go out and make those measurements and to accumulate and to process that data so that it is consumable and useful to someone? So it seems to me you're suggesting that you actually have a market mechanism that will incentivize people to go out and work on those missing pieces of the puzzle. Did I get that right?
That's exactly it. And, at dClimate, one of the core ways we work is we want people to, access not only the data marketplace that, obviously is one of our flagship products, but we want people to use that data and then build, other different types of products and tools on top of that data that address different types of climate issues. And I'll get into that in a second as well, in terms of, how we're making sure that we do that. And then, also making sure that a community and the users are able to do that with us.
Okay, so let's try to just make this tangible for people. You've got lots of different sources of data, and some of them are obviously very recognizable. And a lot of them from, government sources that, behind the scenes, there's, millions of dollars of investment going into getting that data. And it's considered by and large quite authoritative. But, can you give us some examples of what this data might be? I mean, if I was a customer business and I was saying, boy, I need some data, and I went to your marketplace and I looked through a menu, what are some examples of data sets that I might be able to consume, just to help us give some idea of why they'd be valuable to me and how I might use them?
Yeah, absolutely. So I would kind of break it down into, different types of data. So to begin with, a lot of the data currently that we have focuses on, different types of climate variables. So think of data for soil, for flood. Someone reached out to me the other day who's an expert, that company's an expert in air data, which was really interesting, like data related to pollution. So that's one kind of data set. So a lot of different types of climate variables. We also announced a partnership recently with a company called Ecosystema, who are, building flood intelligence tools. So it doesn't really just come down to, the data, but also different types of models and tools that will be made available on the marketplace. And then right now we're also in conversations with companies who develop corporate ESG data. Now that's something, that's highly in demand right now. I'm sure, I'm sure you're familiar with all the different, regulations coming up in the industry within climate, within ESG. And, corporates need sort of that ESG emissions data to, meet their net zero goals, or, do some internal research, or even plug that data into their internal tools. So it really comes down to, what the use case is. But like I said, right now, the data that we have on the marketplace that we're beginning with focuses mostly on, the different types of climate variables. And just to add some context around why that is, dClimate was initially, we were spun out of a company called Arbol, which is a parametric insurance company. And so, the company was using, or has been using, dClimate's, data infrastructure to pay out a lot of these weather-related insurance. And so in order for them to do that, they needed that kind of, data on different types of weather and climate variables. And so that was kind of the initial reason why we started out with, that kind of data. But now slowly we're expanding into, more corporate, maybe even eventually retail. There was an interesting call that I had the other day with a data provider that has retail data and how weather data might be fitting into that. So there's just a lot of different use cases. We are really trying to understand what the needs are in the market from our clients, and then making that kind of data available on the marketplace.
Okay, so, well, it's interesting that you mentioned kind of the origin story and coming out of insurance. I was assuming that insurance would be kind of an obvious consumer of this data, because the data itself can not only help insurance companies build their risk profiles and define the terms of their policies, because they can incorporate climate variables into their assessment of the particular risk of a policy. But as you were pointing out, parametric insurance, which, basically introduced the idea that you can kind of automate, claims, because you effectively have set up a contract with the party that you're insuring. And if you make certain measurements that exceed certain levels, then you pay the policy out. And I've heard of all kinds of examples of companies using, satellite data to assess whether crops have, failed or succeeded, and the ability for insurance companies to really efficiently introduce, insurance products into lots of different marketplaces to allow those marketplaces to take appropriate risk positions and hedge positions is really, really valuable. So that seems to me a really kind of obvious example, and it doesn't. I didn't know that, but I'm not surprised that that's kind of where you came from. And then you talked about kind of where you go from there. I mean, maybe that's the first use case, but as you were talking, I was well imagining that if I was a city planner or a government policymaker and I was trying to do zoning and I wanted to understand where potential floodplains are and what the potential risk of allowing certain kinds of developments or the need to put certain kinds of building codes in place for certain kinds of places, that would be really, really useful.
Absolutely. And it's interesting you mentioned that because it kind of ties back to one of the products that we're building at dClimate. We had a company reach out to us to understand something along the lines of exactly what you described is, they were setting up business operations in, a region, and they wanted to understand how weather impacts, those locations. And so what we're doing now at dClimate is we're building a product to measure climate risk assessment and help, corporates and governments and, Fortune 500 companies kind of meet those regulatory requirements. So physical risk and transition risk is a big part of the TCFD framework. And that's something that we're trying to address at dClimate by building a tool that helps, these corporations and big businesses meet those requirements and then understand how weather impacts businesses and what are the kind of associated financial losses with it. And that's something that, has a wide variety of, companies and individuals who can benefit from that kind of analysis. So yeah, you're absolutely right in terms of, there are so many different use cases for how the data can be used.
So I think it's pretty obvious that a lot of the data that you're providing to these businesses and governments can be quite critical in terms of, their decision making, right? It informs, if they're going to do this or that, or if it's a smart contract that is, creating context or helping arbitrate the conditions of some sort of transaction between two parties. That data becomes a pretty critical component. So, it's pretty obvious that veracity is a key consideration. You're getting your data from a lot of sources, some of which, are pretty authoritative. But of course, we talked about the marketplace and incentivizing researchers to do this. And it does beg the question of how do you introduce some rigor into the process so that you have confidence in the data that you are surfacing to your customers so that they can have confidence in that data?
Yeah, absolutely. And that's a really good question. So why don't I actually break this down into a couple of different layers in terms of how we make sure that the data that we do put out is, accurate and kind of reliable. The first layer would be, that we obviously, as you mentioned, we have data coming in from those verified sources already, like the NASA's and the NOAA's and the ESA's of the world. These data sources have already been verified. And then, with the help of Chainlink oracles, we make that data available on chain. And these oracles ensure that, this data stays in its verified form when we do bring it onto chain. Now, the second layer I would say is we use this thing called skill scores. So, just at a very high level, skill scores are a terminology that are used in weather, and essentially they're algorithms, or I would describe them as mechanisms that basically rank weather data based on its accuracy. So on dClimate's API right now, we have both historical and forecasted data. And so what our skill scores do is, so right now they're only being developed for forecasted data to ensure that, the forecasted data that's available on our ecosystem is actually accurate and reliable. And so how do we do this? So essentially these skill scores are developed within, Chainlink oracles. And I'm not going to get into too many technical details, just going to keep it high level for everyone listening in to make it, easily digestible. So, like I said, these skill scores are developed, within Chainlink oracles. And given that I mentioned that they're currently only being used for forecasted data, the skill scores basically rank forecasted data against the historical data for the same weather peril, using it as a benchmark. So let's say, just to illustrate this, you and I upload, forecasted data for rainfall, let's say in New York City, for, let's say, a 10-year horizon. Now, how do I know that, the data, whether the data that you uploaded and the data that I uploaded is more accurate or more reliable? And so that's exactly where skill scores come in. So skill scores would assign a ranking to both of our data sets. And then based on comparison against historical rainfall data for that same region, for for that region, to make sure that it's been verified against that historical data that we have. And so the forecast that aligns more with that benchmark gets a higher ranking, and then it gets published on the marketplace, and then that becomes available for the end user. So in this way, we're ensuring reliability. And like I said, right now we're only focused on forecast data, but once we have more data available, we'll be expanding the use case of skill scores. But one thing I will say, just to finish this up, is by the end of the day, the data is only reliable as the data that exists. And I'll just leave it at that.
Yeah, well, I think there's actually multiple layers to it, right? I mean, you're talking about forecasting data, and you were talking about, what's the climate going to be in 10 years? There's kind of two components, right? There's the underlying data that is a measurement of a whole bunch of things, ranging from, historical rainfall to wind patterns to, CO2 levels in the atmosphere. There's a lot of raw data points. And, there is the question of, is the data you collected, first of all, accurate? Was there enough of it? Was it sampled in enough of the right places? So there's the kind of the raw data level. But then there's the model level, right? That when you're forecasting for 10 years, it's not just here's a bunch of raw data drops of sensor readings. It is that we've put these sensor readings into a model, and the model has come out with a forecast. I mean, I think of the analog every time I look at one of those, when a hurricane's coming up the northeast coast of North America, that you see all those different lines, and they talk about, this model and that model. And for some reason, the European model is always more accurate than the other models. I don't know why that is, but all those models, I assume, are looking at the same fundamental underlying data, but there are differences in the model's assumptions, right? They've tweaked variables. They've got algorithms that work slightly different to make, different forecasts. So how do you rank the model component, and how dynamic is that model layer?
Yeah, that's a really interesting question. I would say right now, skill scores are essentially doing that. We're trying to use data from the GHCN to use that kind of as the benchmark, to then verify and validate these different, both the model layer and the data layer, against these historical data sets that we have. So I think it comes back to the idea of using skill scores, and then also the idea that we are making sure that the initial layer, which I mentioned, is getting either, whether it's models or whether it's data sets, in its rawest form, is taken from a verified source, such as the ones that you mentioned. Those same tools would be used for kind of going through that process of verification.
Okay, well, that I like that's helpful, and I think that it's completely fair to say that data is never perfect, but decisions made without data are much worse than decisions made with data that we think is probably right. So I think that there's a huge amount of value in bringing this high quality data to the market.
Yeah, the one thing I'll quickly mention in terms of also, making sure that the data that we do make available on the marketplace is made available in a digestible way. So that kind of comes down to the idea behind, how dClimate cleans its data. So I don't know how much you know about like the climate data space, but just very high level, traditionally a lot of these data sets that exist within climate, they exist mostly or traditionally have existed mostly within the NetCDF formats or CSVs and so forth. And if you think about it, these data files are huge. I think the other day, someone on my data team was telling me, and I'm learning so much with my data team every day myself, but that they can go up to like 5 terabytes or even more. Like these are huge data files, and when you have data files that are in these formats, it can get really hard to work with them, just because let's say if a user wants to work with just one piece of this huge data set, they still have to work through a large CSV or a large NetCDF file. And so what dClimate is actually doing in order to make that more digestible is something called a ZAR format. Now, this is pretty interesting. And again, I won't get into too many technical details, and I'm sure my data team will have much better answers than me on this. But I just quickly wanted to bring this up because it's a really cool thing that the data team has done, is essentially what, to make this data available in a standardized format. So think of gridded data, so data that's available in different types of rows and columns. And so what dClimate is doing is specifically for gridded data is to make it available in a format called ZAR to ensure standardization of climate data. So let's say you want to access, let's say, data aggregates or data for a certain area in polygons, shapes, you name it. ZAR basically enables you to break it down and easily access the data that you want instead of having to work through large data files. And so the data marketplace that dClimate has is starting to have data sets stored in ZAR formats. And we are working with data providers now to help them make their data available in this standardized format. And the ultimate goal here is to have this basically be the standard for all the data files all around. And that way, you're not going into, a NetCDF or a CSV and having to, spend tons and tons amount of time to, go through these large files. And this format essentially makes it easier for you to, break it down and use one or two pieces of that data that you might need to work with. So I just quickly wanted to bring that up. And I'm sure if anyone has questions, we have this huge, cool blog that the data team put out. Would really appreciate, if people read that.
I think it obviously makes a lot of sense to, create some standards around how you interact with this data and normalize access to it so that it becomes more accessible. And that's kind of one layer. Another layer of kind of confidence kind of goes to my next question. You are a decentralized network, right? And you use Web3 blockchain technology. Why is that necessary? I mean, why can't you just be, a big database in the sky that we talk to through APIs? What's the rationale for going the decentralized route?
That's a really big and good question. So I'll try to answer as much as I can, but I can honestly talk about this for days. But yeah, as you said, like decentralization forms a core part of how, our marketplace works and also like how dClimate operates. I think decentralization is important because firstly, it's all about empowering, users and communities, then kind of relying on, sort of a single centralized source of truth, which, may or may not be as transparent or accountable. So that's the first thing. So I think decentralization is integrated into the marketplace in a few ways. So firstly, as you mentioned, blockchain is obviously a technology that we're using. It forms, the core of how our marketplace infrastructure operates. And I'm sure, like, as you know, at the BRI, you've been doing a lot of research. Blockchain in itself is an immutable ledger that enables, transparency and easy accessibility. Now, using this technology, our marketplace obviously, welcomes kind of that open innovation idea. And something that can be easily achieved in such a setting. Now, on top of that, I'll mention something really interesting in terms of how, dClimate has been revamping some of the data storage that takes place on a marketplace. So I don't know if you're familiar with something called the IPFS, but essentially it enables immutability for data storage. So, without getting again too technical, let's say you're doing some analysis using data for data that's been dated for March 3rd today from NOAA. Let's say 5 years down the line, you want to go back to NOAA and then check something about the dates that you used on, the data that you used on March 3rd, 2023. What may happen is that either the NOAA API itself or its data output might have changed, basically like the URL associated with the API, but also there might be some changes to the underlying data that NOAA had put out on March 3rd, 2023. Now, within the 5 years, that might have changed, and now there's no way to really actually verify your calculations if you were to go back in time and check that data because things might have changed, the URL might have changed, like I said, or the underlying data might have changed. But if the same data was, stored on this thing called the IPFS, and you were to go back and check that data from March 3rd, 2023, 5 years from now on IPFS, your data will still be available in the same location because of its immutability. And so the idea is that, instead of relying on a central source of truth, in this case, NOAA's is that central source of truth. You're using an immutable source of truth, which doesn't really rely on a central source of truth, which hence, enables that decentralization. And in my opinion, and I'm sure like my data team will agree as well, it's a pretty revolutionary thing that dClimate has taken on. Not only for decentralization, but also how data storage takes place. And I believe, and I am pretty sure that dClimate is actually one of the biggest users of IPFS in the entire world. And we're actively using this to improve how climate data can be stored. So that it helps with, the climate-driven decision-making that might take place 5 years down the line, 10 years down the line. So I think ultimately, it comes back to how do we make sure that we're not relying on one source of truth? How do we make sure that we empower communities and users to, make use of that data in an open and transparent way? And those are some of the pieces in terms of how dClimate's enabling that.
Well, thanks for that. That actually makes a lot of sense. The idea that data there's value in timestamping data and really understanding, its provenance and its history and its change log, and having a blockchain manage those data attributes is an entirely sensible way of approaching the problem. Your website says that you aspire to understand how weather and climate impacts our communities and build data-driven technology solutions for helping communities achieve climate resilience. That sounds like it is a very noble aspiration, but I think that those last two words, climate resilience, is going to be very important. I mean, of course, I strongly suspect that your data is actually incredibly important and useful for helping us how to mitigate some of the worst effects of climate change and how to, hopefully reduce its impact so that if we have insight about what's going to happen, we can make decisions today to try to make it so it doesn't happen or it doesn't happen as bad. That notwithstanding, the reality is that we are going to have to adapt to some new climate realities. And I'm inferring from that statement of principle of vision that part of what you're trying to do is equip organizations, governments, companies around the world with the insight so that they can make strategic decisions to, alter the direction or the trajectory of their business or government in light of and accepting the reality of the impact of climate change, and in doing so, allow them to become more resilient. So that sounds like great noble stuff. Do you have any like really kind of interesting examples of kind of the leading edge of an organization or a company that is leveraging your data to try to build resilience into their business model?
Yeah. So why don't I actually break this down into kind of the different tools and products that we're developing at dClimate? And I kind of mentioned this, in earlier in our conversation that we have a lot of different products and tools that we're developing and, encouraging communities and users to work with us to continue to build that and address, different types of climate solutions. So essentially what we're doing is, like I mentioned, we're using data from our repository and, the open source data to build, different types of tools and products that address these different climate needs that exist right now, just given everything that's going on in the global community. And so, using these tools, we're ensuring that, communities are supported with tools that can help them navigate, how weather and how climate impacts their businesses and livelihoods and so forth. So the first example I can give you is, we've developed an app at dClimate that is focused on how, using predictive analytics, farmers and agricultural businesses can understand how weather impacts, different types of agricultural commodities. So, we have a product manager in our team who has a really cool background in coffee, and that's kind of how we got started in this space.
Don't
I didn't
we
even
all?
know.
we all have a background in coffee.
Yeah, exactly. Yeah, well, obviously. But this product manager, like he has this really cool back. I didn't even know that you could get a master's in coffee, right? And this is just something cool that came out of that education that he had. So essentially, this product was, and so it's a really cool product. And, we're going to be launching this pretty soon. But essentially what this product does is, it helps, we're working with farmers, we're working with agricultural businesses, co-ops and so forth, that are looking to understand, how different types of weather events might impact their harvesting cycles, their production cycles, and so forth. And so, that's kind of how we started out. And we're working with communities in Latin America as a start to really help them understand, what is the impact on coffee. But as we made progress with, the development of this product, I've had so many calls over the last few weeks where we've had people, reach out to us and, give us their feedback, but also really curious to see how, this analytics that was initially built for coffee can be applied to different types of agricultural commodities. I had a call the other day with someone who's looking to understand how weather might impact their rice and harvesting cycles around rice in Indonesia, which is really cool. And so, this is one of the products in terms of how we're enabling, local communities to help get them, strong tools that can protect them against any different types of weather risks that might be associated with production cycles. The other tool that I mentioned briefly in this call is aimed at, corporates looking to understand physical and transition risk and how climate perils might impact their, business operations and associated financial losses, so that the corporates can meet their ESG disclosure requirements as a part of their ESG strategies and so forth. So there's a huge demand right now that we have coming in from clients that are looking to, get that sort of assessment. I have been speaking with a lot of banks and financial institutions myself who are really interested in, meeting some of those requirements that are coming up from the SEC as an example. So that's the second use case, I would say. The third one would be in the carbon market space. So, and I think this was something that we discussed very briefly in one of our last conversations. But, we've built an incredibly powerful tool for digital MRV that essentially measures carbon sequestration and above ground biomass estimation in forested regions. And so, I'm sure you're familiar with, the traditional systems that have existed, that do that monitoring and reporting and so forth. And it takes them a long, long time to do that. I wouldn't name any names, but I'm sure you know what I'm referring to. And so, what we're doing is we're digitizing this process and we're helping forests and the communities that live there, to receive the attention, the care, the funding, and the help that they need for preserving those forests. And then the last use case I'll say is obviously the open data marketplace that we've been discussing in this podcast, which is enabling data users to connect with data providers and build solutions and, kind of create that ecosystem of tools that address different types of climate solutions. And so, in a nutshell, all these different tools and products that I've just described have one thing in common, and that's essentially the power of data. It comes back to that. We're using data, and we're using that in a data-driven way to build these different products and tools that they have numerous amount of use cases. It really comes down to what the end goal is and what the end need is from the user side.
Well, of course, you just quite led into my next question, or my last question, in a very nice sort of way. You mentioned our last conversation, and we've talked about, and I think that most people can well understand how data is important fundamentally and as a contextualizing variable to lots of different industries. We talked about insurance, we talked about government planning, you talked about agriculture, public health would be another sort of major area. But in that last conversation that we had, and we were talking about carbon and such, the kind of the framing of that conversation was about the emergence of really a new business area, a new industry that is kind of enabled because of and built on top of Web3 and blockchain technologies. And that was something called refi, right? Regenerative finance. And I was absolutely fascinated by a lot of the discussions that we had and other people in that meetup we were at had about this emerging space of refi, and data at large, and especially climate data, becomes kind of one of the most important inputs to that whole industry. Can you give us a quick overview of what refi really is and what its potential is?
Yeah, absolutely. So why don't I actually break this down into, firstly, what refi actually means, and then how that is applicable to what we're doing at dClimate. So, as you said, like regenerative finance or refi is actually a combination of, these two different terms called regenerative economics and then also decentralized finance. So on the regenerative economics side, essentially the idea that, helps bring power back to communities and help kind of restore what has been lost, just at a very high level. And then DeFi, which is something that everyone's been, super familiar with over the last 2 to 3 years, is essentially, it's based on the fundamental that does not rely on kind of that one source of truth. And, it looks to remove that, opaqueness and kind of promote transparency in financial systems that have traditionally not existed. And so refi is a combination of both of these ideas. And it's kind of focused on the idea of restoring the environment and communities and kind of promoting the idea of transparency. And so dClimate, highly aligns with these fundamentals of refi. And, firstly, we do this by creating an open ecosystem. Throughout this conversation, I've mentioned this, I think, a number of times, that we highly encourage our community to work with us and help us build those climate solutions. And we want to help them do that as well. And so, whether it's through, using data from our marketplace, or whether it's through, using one of our open and transparent products and partnering up with us on that, where we are looking for that collaborative, action in terms of addressing different types of climate solutions. And so, the last thing I'll mention about refi is that, as I'm sure this has grown significantly over the past 2 to 3 years. Refi didn't, I'm sure it existed, but it wasn't, nobody really knew what it was. And so I'm really glad that, this has emerged as its own industry over the past few years. And there are a number of companies that are working on, different types of refi initiatives, whether it's, through tokenized carbon credits, or whether it's through, carbon credit marketplaces, DMRV tools, or, climate data tools. The whole ecosystem is so collaborative and open to creating those partnerships where we can benefit from, kind of each other's unique expertise to work towards that collective climate action. And I think that's what refi is all about. And, I will just say that, just to wrap it up, dClimate is definitely proud to be a part of this refi movement, which I know for a fact that it will only continue to grow. Over the past few years, we've had so many more companies emerge that are addressing so many different types of climate solutions. And I think it comes down to that collective climate action, and that's what ReFi is all about.
Yeah, I get a sense that the ReFi movement has its roots in a bunch of places, including in the circular economy. The idea that we need to figure out how to use the resources we have more effectively, efficiently, and in a more sustainable sort of way. And the Web3 and distributed finance technologies are providing a mechanism, combined with these data oracles, are providing a mechanism that allow us to, figure out what the impact of certain courses of actions are and certain production of products are, and then, kind of assess them in this broader context of, what is a responsible way to use the resources we have access to, and hopefully, leave us with a much more sustainable and viable planet at the end of the day. So I'm obviously, I think everyone's a big fan of that, and I'm delighted that the technology infrastructure is emerging that is allowing, people to, make investments and to build, viable and productive businesses in this space that kind of contribute to our collective wealth. So congratulations on what you guys are doing. I think it's a very important part of the equation. We're going to wrap things up right now, but thank you so much, Manavi, for joining us today.
Thank you.
This was a tremendously interesting discussion. And thank you for, adding your thoughts and helping us better understand how data networks are adding value to business and government and the role they're playing in the emerging ReFi space. And thank you all for joining us for this episode of W3B Talks. You can find out more information on dClimate and all the work that they're doing at dclimate.net. And you can find out more research on this and many other topics at blockchainresearchinstitute.org. I'm your host, Doug Heinzman. We hope that you will join us for our next episode of W3B Talks.